Welcome. Good morning. Mic check. Hello. Good Lord. Talk about immaculate timing for my internet to die. Like immediately as soon as I hit the button, my internet dies. Perfect. All right. Well, I think everything's up and going now, so I think we're good to go, but unbelievable. Geez. Give me a second here. I'm just getting everything started. Had to restart everything, and now I'm kind of on the back foot here. Let's see, get this up there. What else am I missing? I'm missing my levels. Get those on screen. Hopefully that didn't completely destroy all of my earlier drawing objects. That'd be fun. Let's see here. Oh, and then the news. That's what I'm missing. Perfect. Okay. Eesh. All right, with a little bit of a rough start there, but I think we made it through. So before we jump on in, as always, on the left side of the screen there, make sure to read through the Live Trader Morning Prep PDF. Very important to go through and understand everything that is inside of there. Jeez. If you aren't a member of SSFTG or part of the YouTube family, check out the join button below the stream to gain access before our next private webinar. Get access to SSFTG Discord chat, not to mention the awesome badge next to your YouTube name to show support and all the other stuff that comes along with it. If you're trying to figure out what it is exactly that we're doing every day, look no further than the SSFTG Day Trading Academy. Not including live streams, YouTube tutorials, and everything else, the Day Trading Academy comes with 19 plus hours of material loaded for you that is, and I mean, honestly, that collection just keeps going and going. Please keep in mind that the YouTube broadcast does have, and I got it back to about normal, between 3 and 10 second delay. Obviously, each person might have a slightly different delay. But if you want to level up to VIP status, you can enjoy the exclusive permanent access to our non-delayed live analysis stream via Zoom Direct Meeting, as well as monthly VIP webinars, private VIP events, even one-on-one scheduling access. The list goes on and on. So whether you're here and are totally new or you're a veteran over in the VIP stream, welcome. Glad to have you here with me today. Let's take a look at some news, take a look at some charts, get things rocking and rolling, see what's going on for today after a little bit of a rough start. I think we're ready to go. So make sure to grab your morning DP levels. Those are posted for you. We got those covered. Get those knocked out for you there. Going into the news for today, as far as the news calendar is concerned, a lot of the big news was ADP non-farm employment at 8:15. That came out worse than expected at 517,000 versus the forecasted 550. At 10 o'clock, we do have the pending home sales month over month for February. That is forecasted at negative 2.6. And today is Wednesday, so we have the crude oil inventories, which is forecasted 0.107. Now, if we go back to yesterday, we can see what's going on with the API crude oil stocks, and that gives us an idea of what to expect for today. And for today, it's kind of giving us a clue that it might come out a little bit more bearish, a little bit closer to that 4 million mark. If we look at today, they're anticipating a 0.1. Seeing it come out at around a positive 2 or 3 build would make a lot of sense, and seeing it be bearish for crude oil doesn't necessarily mean that the market will respond bearish, as we've seen lately, but something to consider, I guess. That's about all we've got going on, though. Looking across the board from the top down, we've got the NASDAQ coming off of the top of the wedge. I mean, really, it hasn't done anything. It's still stuck in this wedge, stuck in this range. Nothing's happening. It's trying to go higher. It's trying to go lower. It does appear as though the majority of the traps are happening on the lows. So, I mean, realistically, with all the wicks, all the traps, everything else being a little bit more predominant on the bottom side, it does give emphasis to the bulls, which obviously led into this breakout to the upside. The big question now is, are they going to be able to continue it through this resistance, or is it just going to fall right back down to the wedge low? Doesn't have any undertow or anything like that to give us any clues of potential, concern. If anything, originally, it would have been going down here, and that would have been their attempt for the sellers to try to take it lower, right inside here. And that attempt from that perspective has failed. And if that perspective has failed, well, then we're probably going to get a couple legs to the upside. So as far as upside objectives, it makes a lot of sense to see us pierce back into the 13,000s. That's going to be the big objective, huge round number, big psychological level. Not really a big surprise, right? So that's going to be the zone of interest at around 13,000. See if it can migrate its way up there. It's getting pretty extended up here. Buyers are going to be liking the thought of a pullback more and more. Over on the S&P, we are breaking above the wedge top and showing quite a bit of continuation. I mean, this is one heck of a string of bars here that we've got to the upside, and they are showing some really, really good strength. The big question now is, are they going to be able to break above these previous double top swing highs at around 58, 50, 59 in that zone? We do have rising support. Falling resistance is broken. This is our chance, right? This is where they're going to be able to at least try to get something going. On gold, we've got a nice balance point with a gargantuan amount of volume stepping up here. This is something that you always kind of want to pay attention to whenever you're breaking down through a level. Obviously, when they break out through a level with a candle like that, it's going to create a VVP. Just because it didn't have any time to trade any volume there. There's naturally going to be a volume void. But once it starts regaining a little bit more volume, that's going to be the first clue as to what's going on. Are they accumulating, which would be increasing volume on the way down, or are they distributing or profit taking, which would be lowering volume on the way down? In this case, we saw that initial big pop in volume. It is still lower than the previous. That would suggest that it's a little bit more profit taking than buyers trying to take over yet. So this is a really nice way to try to not necessarily time a bottom, because trying to catch a bottom is, well, it's don't expect high probability, right? Let's just leave it at that. But I mean, if we're going to try to approach it with as much on our side as possible, and we see volume that's not backing a reversal yet, then it doesn't make any sense. So we see volume drying up, and then we get this gigantic chunk of volume that comes in down here in the 1685s. That was so much volume, in fact, that it took over the POC. The POC is now shifted down here. That's a pretty big clue that if there were buyers here and these buyers were stuck and they didn't get out, then chances are, right, they're accumulating. They're buying a little bit more. So a point of interest is going to be right around in the middle, and that lines up with the previous swing low and everything else. So that is going to be the point of interest, is back up to the 1700s to 1705s for gold if it's going to try to migrate up. We don't know if it will yet, and there is a VVP that's kind of stuck in the middle at 95. That might be enough to hold the market down. We'll have to wait and see what they want to do. There is a heck of an undertow right now. Crude oil backing off to the larger L2 after breaking out of the wedge lows. We saw initial support there. I mean, there is also the $60 mark. Is it coming off of L2 or is it coming off of the $60 mark? I mean, you decide, personal choice. It could be either. It could be both. It could be all of the swings. It could be all of them, or it could be none of the above. But the thing that we do know is that the $60 mark so far seems to be the line in the sand, and the buyers are trying to support above it. Although every time it gets closer to the highs where it really needs to prove it, it falls short. Just like it did over here. It fell lower high and another lower high. And typically when you have three lower highs like that are pretty pronounced, well, that's not a good sign. That's usually a bigger clue that the market's going to start taking a dive a little bit further down. And the next logical objective would then be a potential wedge bottom, 3 press low, something along those lines. Should be like this. Doesn't have to go too much further. That'd be at around 59.80s. That is the nearest, obviously. There could be a slightly more aggressive one at a little bit more of an angle, but that puts it actually even higher, 59.98. So just got to kind of wait and see what this wants to do, how far it wants to go down. You know, crude, but we also have a lot of OPEC stuff going on. I mean, oh, lordy. I just got to be careful on crude. I don't trust crude much anymore after seeing it slide to negative 40, so just leave it at that. Over on the euro, still seeing a drive to the downside. This is a good clue that we're getting on this volume, right? So if we drive this a little bit further, we can see it's accumulation, and then all of a sudden everything stopped. This is either the last ditch for buyers to try to rotate this market up before it breaks down. And if it breaks down, we're probably going to see a deep, what's the word? The word I'm looking for is escaping me right now. all I can think of is devaluation. That's not it. Whatever. Distribution. There we go. There's going to be a distribution phase because all of the traders who are stuck here, they're not going to want to buy more for a little while. Likely, there's another volume node somewhere up here. And a lot of the traders who are short from this zone are going to be taking profit. So they'll wait for those traders to take profit, build a secondary zone. And that means that if the buyers don't show up here and this starts going down, we could easily see this slide below 1.17 and honestly see this go all the way down to the 1.16, low 1.16 area. This could get pretty nasty on the euro if it doesn't start showing up to the party here for the bulls. On Bitcoin, nice little flashback. Not really much of a surprise there. I think that's kind of expected. And honestly, I don't necessarily think it's done yet. This is something that is becoming more and more typical when it comes to Bitcoin and really everything. But when everybody is saying, oh, Bitcoin's going to the moon, or XYZ stock is going to the moon, whatever it happens to be, that's usually when everything falls apart. And it's usually on the back of news that you would expect to be good. So what did we just have that came out for Bitcoin and Ethereum? We just had huge PayPal news, right? That's fantastic. But, well, wait a minute. Where's Bitcoin and Ethereum right now? Do you think PayPal are buying up here at 59,600? Not a chance. That would be really stupid. So instead, it's more likely that those buyers have already accumulated on all of these dips and have been accumulating for quite some time. Think back to... man, I'm losing names all over the place today. All I can think of is Charles Schwab right now. That's not it. JP Morgan Chase. What's that guy's name? JP Diamond, man. Or JP Diamond, whatever. He was talking about how terrible Bitcoin is and it's all garbage and blah, 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 all the while accumulating it in the background, right? It's the same thing here. PayPal is not going to announce it and then expect to see this thing go to the moon. There's going to be a lot of buyers who try to get that move going. But it makes a lot more sense for, at least from a business standpoint, that they're going to be buying on that dip, sell into the rally, sell into the hype train, and then buy when it crashes down to everybody's stops. It just from a liquidity standpoint, it makes way more sense if you've got some serious capital to move, which when we're talking PayPal and some of these big names, they've got some serious capital to move. So these are some very obvious points of interest that are spiking back. And where are they spiking back to? They're spiking back to the last major swing where everybody had their stop. Well, why would it go there and then stop and turn around? That's called accumulation. That's all of those stops getting triggered out. Someone gobbled them up. Otherwise, it would have gone through. I don't know if it was PayPal or whoever, but obviously it took a lot of money to reverse it the way that it did. And buyers are looking pretty good, but I would really love to see one more pulse to the downside. And the reason is because every time we've had this move lower, this has been one big pulse, and then it jumps back to the upside. And very rarely do we get a two-legged correction down, and when we do, that's usually when it has the biggest launch higher. So we've got this first drive down. I would love to see buyers getting involved here, trying to get the reversal up, thinking that this is going to be the bottom, and then see it just absolutely obliterate all the way down to the lows and re-challenge this 55.5. That would be the big zone of interest. And then you see the rotation back to the upside. That would grab all of those stops. That would grab a possible wedge low. You can see it kind of forming already. We don't know where the high is yet, but if it wanted to go this way, obviously this is all speculation. But if we can get this lower high, what a fantastic scenario to see this dive way down here to get some bottom just bargain bin pricing down in the 55Ks just to see it launch back to the highs again. Especially noting that it fell just ahead of 60,000. You know how Bitcoin likes moving in those 20s. 20, 40, 60. Last time it failed under 20, it didn't do so well. Looking at Ethereum, we've got more continuation to the upside. I think we finally found the channel. Finally nailed down the channel. It came off of these first three little swings down here, and none of it was really making sense until we finally started putting in some highs up here, because then we can transpose that level to the top side, and that gives us perfect resistance across the high, and then we can subdivide this channel into quarters all the way down. We've got the top quarter, which gives us a very nice level of support resistance, a bottom quarter, which is giving us a beautiful level of support or resistance. It lined up perfectly. So I think this is going to be the channel that we're going to be dealing with for a while, and we can kind of look at this from an aggressive to non-aggressive standpoint. Aggressive buyers are going to be buying the top quarter, looking for continuation to the upside. Value traders are going to be looking for dips down to the lower quarter, and like the bargain bin pricers, they're going to be looking down here at the base. So that's kind of what we're dealing with right now. Ethereum still seems very, very expensive. I don't mind it. I like Ethereum, and I think it still has a really bright future. I'm just not a huge fan of it where it is at the moment. Crude oil starting to try to chop through that bullish L2. If we go back and take a look at what's going on so far today, I'm running a little bit behind schedule here, so I got to hurry up with all the internet dropping and everything. Started off with the Asian session. We had a half deviation to the upside before rotating back in. And I mean, to be fair, since then, it really didn't do much because we created the European session. The European session, not much better, but we did have the singular deviation up so far. That was actually not even held as resistance for like a wick, now held as support. Looking for continuation back up to the upside around 86.50 would make a lot of sense. 3 press wedge top completion at the top of a 2 deviation off the European move. I mean, perfection. So let me get this on gold, put that on all charts. There we go. 1 second. All right. Jeez. So I would love to see a bullish continuation to the upside. Realistically, we had the exact scenario that we were looking for yesterday. The buyers bought below the previous low of day and have rotated back to the upside. They didn't get the bull engulfing candle, to be fair, but this is a pretty strong response. So once the day starts climbing above the previous high, that's when things have to really start showing up as proof, right? We need to see the buyers show up and continue this back above that previous high so that we can close this bull bar back to the upside. So far, so good. It's looking all right. On the hourly, not much has changed. Still waiting to get back up to the 13,000 area to 86.75 or so. Top of the channel, still a ways away. Rising channel support. I mean, we might be able to change it a little bit, but I just don't know how much that's really going to change things. We'll see. 15-minute chart, incredibly strong rally to the upside. If we look at this from a volume perspective, first off, looking at the move down, basically all of yesterday to the lows. Accumulation volume, right? Very big clue. So accumulation volume to the downside as we continue to put in higher low, higher low, higher low, and ending out the day. Let's see what they did with volume then. Built even more. 12,865 was the POC from yesterday, which they built in on the accumulation phase. So that's likely what they're going to be defending today, which is exactly what they are defending today. So that support is there at 865. As far as going into today's price action and looking at what's going on, we can kick this move off. All right. Nice jump to the upside. Starting to see a lot of volume building around a previous area up here. So let's see. Why are they building volume up here? We spent one entire day basically up there. Where's our POC? It's down here. Okay, so that's actually better. The fact that they built the POC and it's down and the market staying above that, that's actually an okay thing. They're trying to get a little more continuation to the upside. Fairly obvious that there's a gigantic VVP resting right back here that would love to get filled in on the open. And that's where longs are going to be looking to step in, by the way, that 12,930 area on those dips. If we can close the settlement, then the 12,890s will be interesting as well, but that VVP zone is going to be really nice. Looking on the faster perspective, started off with a rotation to the upside, L3, continues up. Oh, there we go. We got the L1 and L1. So they're currently fighting over an L1. And 12,940 would be the L2 pullback. So this is fitting, I mean, literally perfectly for a TU-L2 pattern to the upside. You know, I don't think we could ask for a better situation. Doesn't mean it's going to work, but going into the open. Would love to see a little flush down to the 941s area, that zone for buyers to kick back in again. Nice little dip, and they're building out a potential narrow little baby wedge right here. So aggressive buyers will be trying to pick this up. I just want it to go a little bit deeper. I'm trying to be a little more greedy on my entry, but that may mean that I missed the setup too. The 15-minute chart also looks like it's a pretty disgusting twin reversal top at 12,970. And that's a little nerve-wracking. So that could be a really good signal again that the market's going to want to pull back a bit further. Not seeing any real undertow or anything setting up yet. Although the much faster is starting to display that. Okay, bulls trying to push back to the top of the wedge. All right. Bulls show back up to the party. We still haven't gotten that L2 pullback, so that's a little bit of a disappointment. But like I said, this is kind of the trade-off. If you're going to get greedy on your entry, sometimes you miss the trade. It hasn't broken a new high yet, so it's still viable if it dips back to an L2. Ooh, and that bear bar on the top. Come on, buyers. Don't let the sellers take that candle. There they go. Okay. Still haven't made a new high. Another strong bear bar on the top could spark that second leg down, too. I have a hard time shorting this kind of market, obviously. I'd much rather buy a dip, but something to consider at least. S&P is screaming, yeah. Lately, I haven't really liked paying attention to any correlation between the S&P and the NASDAQ because lately there hasn't been one. But it is something to pay attention to. I mean, if it's up enough, it'll suck it up. It's not going to have a choice, you know. Okay, here we go, NASDAQ. Yeah. No, well, no. Okay, a little lower. Crap. That looks like a break-even defense. Buyers are trying to buy at the 962s and prop the market back up again. God, I wanted it to slide a little bit lower. If the S&P get a halfway decent dip back to 59, realistically, I have to assume that buyers are going to be strong enough to be able to bounce it back up for at least a scalper's profit. NASDAQ, that's another really nice bullish indication. Do the sellers take it back? Buyers on the S&P looking for a dip to 39.59 or preferably even better. We've got about 40 seconds on this candle. Money just moves around from one sector to another. Yeah. It looks like NASDAQ bulls are taking this back again. If they close another strong bull bar on the 500 tick, that will be the spark for scalpers, at least, to try to attempt the top. And the S&P, I don't think is going to give you that dip. It came close, but not a good enough bull bar on the NASDAQ. And the S&P, what did they close at? 62? I'm going to flip-flop these, though. NASDAQ just kind of poking into the top, but it's not really doing much of anything. Crude oil breaching the lows for a second, but then coming right back up. Man, S&P doesn't want to play ball. Pushing back up to the upside now, testing the zone of resistance, this major area of interest on the NASDAQ. And if this can overshoot up to the highs in the 94s, 95s, this becomes a very interesting zone. Like I said, I'm not a huge fan of shorting against a really bullish market, but a massive overextension is one area to possibly scalp back on. Need a bit more confirmation from volume, though. Let's see what's going on. So initially we had accumulation. They gave up. Now they're accumulating a little bit more, but it's starting to break above. So if they can stick this high, that's where we start getting that squeeze to the upside. So this is dangerous territory. The nice thing is if it does go higher, it's not going to take much to disprove the setup. So volume doesn't hinder things. S&P still no pullback, still waiting for a pullback. Nice continuation to the upside, getting a little more overextended. Give me one good pulse through the top here. That 13,000's right around the corner. A lot of times if they're going to make a run for 13K, they're going to overshoot it by a good handful of points. So don't be surprised to see 13,005, 13,000 15, something like that. A little bit sideways here. Building a nice undertow up here as well. Come on, S&P. They can get one more push above the high here on the NASDAQ, assuming that they fall short of 13,000. Then we should have a nice little pullback to refill buyers trying to grab that 13K. If they overdrive through 13, then we're probably going to get a run, like I said, up to like 1305 or 1310, something like that. So scalpers initially will be looking to fade back off the top of this wedge high. Immediate resistance on the new top. I want to see what kind of responsiveness sellers can come up with that kind of pressure on the top. We still haven't had the test. Now they got the test. They're resting on top of 13,000, but again, if it's going to overdrive, don't be surprised to see like 1310. There's no need to get too aggressive if you're expecting them to blow off the high. Now through the 10s, we start getting into that overextended territory again. Well, I was there for a split second, but I didn't get anything. Okay. Now they've got a chance to try to pressure a little bit more. But again, this is a blow-off high in the NASDAQ. There's absolutely no need to get too aggressive. We're around the open. If it's going to pull back, you're probably not going to have to do a whole lot. As far as downside objectives, I'd like to see it get back towards like the 95s or so and try to push back through the other side of 13. But they're still kind of fluctuating around this zone. First objective area would be around 93 or so, which is about the first entry point anyway. No, I don't want to market if touched, actually, thanks. let's try the limit. The market if touched on the NASDAQ. I've been there, done that, and it usually doesn't go in my favor. Slip City. There's still a boatload of volume coming in. Holy cow, these pulses are fast. Just need one of those good pulses. POC building around that 4/4. Definitely displaying an accumulation on this pullback. So if the sellers are going to push down, I'm going to need them to show up to the party sooner than later. And that 4/4 is becoming a little bit kind of wishy-washy. Big reversal back to the upside. It's a lot of sell pressure that hit there. I reduced by half. So at least if it does go above the highs, that's fine. Let's see if they get another rotation to the downside off of that. But that was a pretty big escape hatch move. So a reduction of risk is almost necessary. See if they get another pulse to the downside, but reduced risk on that big bull attempt back to the upside and the shift in volume. Now we're seeing a continuation back to the upside. They ran over a ton of volume at 10/4. Nice bear bar on the highs. Actual risk objective would be there and there. Golly gee willikers, Batman. We got ourselves some volatility. Big snapback. Pushed back down, hovering around the 13,000 area. Scalper's objective just below the 13,000s for a quick overrun. You know how the NASDAQ likes to play ball. This bear bar potentially indicating that some of these sellers exiting at break even, though. Volume note, it's still at 10/4. Watch the volume on this pullback. Are the sellers nervous? Did they start exiting at break even? This is what we want to see. See if there's a volume dump around this 13,005. Volume still saying around the 8s, but no real shift or anything. $13.75 was the original point of interest that sellers held off of on the top. Although, again, this is a bullish market. I'm not going to increase risk too aggressively while the market's going higher. S&P, I still haven't been able to get that dip. just wanted a pullback. That's all I wanted. Nice big blow off on the highs, now testing DP resistance at the top. So at this point now, it's fairly obvious that the trade is wrong. So I'm looking at this next dip, not necessarily to do anything with in terms of making a huge profit to the downside or a swing lower. It's more just looking for the best route to exit with the least amount of damage. You could just hit the stops right now. There's nothing wrong with that. Depends on your account's flexibility, I guess. But there's an hourly gap at 13,050. Yep. Oh. We still haven't gotten that L2 pullback. I don't think we've even gotten an L1 yet. It's just, there's been no dip. 10 o'clock reversal, right? We still got about 10 minutes. I thought you said you didn't want to short the uptrend kind of market. I don't. And that's why I'm reducing size while I'm realizing that I'm wrong on the upswing. Normally, if I were looking for any type of size, trying to look for rotations to the downside, it's a low probability game. If it works, you get those huge drives lower. So the probability is not great. The reward is fantastic. So it's worth the risk to try to hold on to in that sense, but you'll notice I'm keeping the risk incredibly small in terms of size. I'm not going in with 6, 7, 8 or anything crazy like that because I know the volatility is driving the market higher. So it just doesn't make any sense to go much further than that. What the heck was that? There we go. And then once we do get the dip, which there is always a dip, then I'm looking for the L2. That would be the preferable scenario. If we're looking at value pullbacks from the last move, the biggest pullback was top to bottom 0.71%. That was the biggest pullback before it reversed back up again. A 0.71% though? That just doesn't, I mean, that would be a fantastic spot. Don't get me wrong. I listened to you and only went long, so thanks. Yeah, definitely. We've got a, I mean, I don't think it's going to get back to a value perspective like that. This kind of momentum is usually like half value pullbacks. But I'll leave it there just so I have my eyes on it. That would be nuts. S&P, I'm still waiting for 39.62. I don't know if I'm going to get it. If we get a dip below the previous bull bar now, I mean, we had a bull bar with a non-responsive continuation. I would still rather buy 39.62, but I think now it makes more sense to step up there. The bottom side of the earlier L1 is at around 13,102 to 105 in that area. So in terms of resistance overhead, there's not really much until then. Buyers who trigger in at 39.62 on the S&P would be 39.64.75, 64.50, at least for first objectives. So you can see from the side of, oh, hang on. Jeez, ask and you shall receive. S&P dipping back 64.50 would be the first objective. It's already at a point. What? Okay. Wow, that's been a minute since I've seen the S&P move like that. Fantastic drive to the downside. Holy cow. Just took that dip for a quickie. Yeah, I mean, that was all it gave, too, was that quickie. Man, that thing was... It hit the low and it was gone. Well, I don't think it's going to dip back down there again, but if it does, I'll take it at 39.62, but I'm not going to go in with any larger size or anything like that, because it makes sense where if it is going to dip, it's going to try to fill in some of this candle gapping. Candle gapping to the upside on the S&P leaves objectives open still 39.69. So there's still room, there's still room for the S&P to continue to the upside, kind of unabated, if you will. Is that the right term? Something like that. I took it for the upside. Yeah, definitely. Yeah, that's the only way that you would play that on the S&P. There's no way in the world you would be shorting at 39.62. I mean, you can try, I guess. I wouldn't recommend. So here, right, on the NASDAQ, and the reason why I'm not doing a thing is we're seeing the distribution volume. We're not seeing any reason to want to do anything yet. Again, if you exited earlier, then I think it was at like a negative 60 or something like that. I don't know. But, I mean, regardless, still not seeing the sellers try to pressure in at all. Well, they tried, but then they gave up above 13,013. S&P, maybe another dip lower, but that doji, 64.75. 64.75, 65.75 is above the high. I'm okay with that. I would be more interested in a bottom weight, though. So 64.75 is much more on the scalp side of things, whereas if it can dip just a little bit deeper, that offers up buyers larger targets. Starting to see potential signs of accumulation up here. Buyers fill in at 65.75. The nice thing is that puts the objective ahead of the previous candle's high, which makes it a little bit easier in terms of probability. You never know my ADD or anything. Yeah, for sure. I get it. It's all good. Gold seeing a nice pump to the upside. Euro also seeing a nice jump to the upside. 10 o'clock news around the corner. You scale in when you see it coming down. So there's a couple different ways that you can approach. Well, first off, I want to make sure I'm answering the right one. Which one are you talking about? On the S&P or the NASDAQ? They're both effectively doing the same thing, but they're going to be different approaches, obviously. The NQ. Okay. So the NASDAQ, the entire purpose, the entire thing that I'm looking to do right now on the NASDAQ is Essentially, go long. I know it doesn't look like it right now. I was looking for the top to try to get put in on that third press top on the volume, and then a rotation down. Low probability, high reward. It failed. Rotated higher. We knew it was low probability, so the stops were above the highs here. This is where I chose to enter a little bit more on the counter side of things. But since then, it's been breaking higher and I'm waiting for the accumulation. My objective now that this rotation has been proven wrong is I want to see that value pullback. And I want to see that dip back to allow sellers who are entering in much more aggressively than I am. We're talking, traders who are dealing with hundreds of contracts. The ones with the infinite money hacks over at Goldman Sachs. They're able to build in a totally different way. For me, I've just got to sit on the sidelines and wait. I know I want to build in and I'm still sitting within risk tolerance. And the only reason I'm able to do that is because I'm not building in. So we're just kind of sitting and waiting at the moment in terms of the reversal for volume. We're beginning to see volume step up. And if we do get that rotation to the downside, what I'll be looking to do is waiting to see what the volume looks like on that pullback. I want to see where do these shorts who are stuck, myself included, but where do the big contracts, the 1,000 contracts, where are they coming in? Where do I see that volume start dumping? And it would look like an accumulation phase to the downside because they're getting out more and more and more aggressively closer to their break even. That's where I want to start building in for longs. And that's why I'm sitting here just kind of waiting right now in the NASDAQ. Yeah, exactly. We're still not seeing accumulation phasing yet. This volume was lower again. We started seeing it, but it looks like they're giving up. There's still no reason to enter more. Could you imagine how much more painful that could be if you were getting too aggressive? I mean, realistically, that's why it's so important to pay attention to these factors. And why, if you're wrong and you don't want to risk it, you axe it when you realize you're wrong. Because it just gets worse and worse and worse if you don't manage it properly. Until it rips your face off. S&P couldn't quite get that secondary dip down, but we got the scalper's target out at least. I wanted a few more contracts, but it didn't give it. More legs to the upside. Still distribution volume on the NASDAQ. If we look at the micro NASDAQ, which can sometimes give us a cleaner picture in terms of volume profile, psychological perspective, just because the micro is going to attract a lot more smaller contracts trading more often. This will give us a different profile that has a bit more of a psychological basis. Here we saw that big volume pump, and again, we kind of saw that dip back. They tried getting it going, but not enough yet. Now maybe we'll hang around here for a little while and continue building the zone. But we don't know where that ceiling is yet. Oops. Looking across the board, we've got gold catching a nice breakout above. That volume node did end up holding. So the breakout pullback above this move will be a big zone of interest. I don't know if it's even going to pull back, but buyers will be looking to hang out around the 87s, 88s. Crude oil with a vindictive little twin reversal on the lows and then rip back up again. That's not nice. The one thing that stands out to me on gold is the potential of this being that break-even run from the longs that were stuck before. Because of that VVP, right? Right there. Generally speaking, big volume voids are where a lot of people's averages end up being. So a lot of traders, if they're stuck on those longs, and we know they built in down here because we saw the POC shift. Seeing some resistance building in around here, okay, it's breaking above it now. I don't want to see a twin reversal. Speak of the devil. If it does want to go a little bit further up, then the next zone on gold is going to be all the way up at the 1780, 18s-ish. Starting to see volume building in a little bit more. We still have distribution volume on display. They're starting to step up to the plate a little bit in these 70s, though. A lot of times before we see the volume actually hit, what it's going to end up having to take is a bit more proof than just, one bump in the volume all the way over here. You're probably going to have to see this do something along these lines where it goes up, makes a failure, tries to rotate down, gets close to that break even, tries sparking a move to the upside. Maybe it succeeds, maybe it doesn't. And then, maybe it'll get that 3 press from there. But there's still a lot of maybes, which means that this is still very early. No reason to do anything. Crude oil hovering, not really doing much. 10 o'clock didn't do a whole lot. Gold on the 15-minute. That twin reversal, we got about 10 minutes left until that kind of solidifies. Yikes. Well, while I'm waiting for the NASDAQ, what other markets move around? The Dow's volume is atrocious. I don't trust crude oil, and I don't trust... Well, what's the Dow look like? Just because I'm kind of hanging out with the NASDAQ yet, I'm still sort of waiting on it. I'll put that up in the corner so we don't lose track of it, obviously, but what's the Dow up to? I was going to say, what? I haven't taken any trades on the Dow. What the heck am I looking at? All right. No, I'm going to go back to the NASDAQ. That's pretty terrible. Let's just scalp the S&P. Nice volume starting to build here on the NASDAQ. Well, we might not have to go to anywhere. Like, hey, wait a minute. Don't go nowhere. We're starting, we promise. Let's bring this back a little bit, though, huh? Starting to show signs of an accumulation phase beginning. They're topping out the volume in the same area, not really doing much. We are approaching the 1 DP to the upside. This will be the next zone of resistance. Still keeping risk incredibly light. Gold and oil always kill me, yeah. They're tough markets because, man, when they move, they can move really nicely. But, ooh, man, when they don't, they'll rip your face off. 170 points from VWAP. NASDAQ usually likes to reverse course. Typically. But, I mean, at the same time, we don't know where the top is yet. So there's no reason to take any type of aggression or any type of risk, if you're approaching it in the build-in style at least. What if the NASDAQ keeps climbing 800 points more without a pullback? Where do you just cut it? That's a good question. So whenever you're in a situation where the market's starting to rally away, first off, you always have to have a plan, right? The objective, I'm looking for resistance, not really stepping up until the 107s. So I don't mind building on the way up, and if it does pull back, then cool, I'll take it off at break even. That's the perk of being able to build on the way up. But if we start not finding resistance around the 110s, the 113s, the 115s, the 120s, where I want to see that resistance come in, and we start breaking higher in the 130s, 140s, you have a choice. You can either axe the trade and eat the loss, or you can initiate a potential hedge. I mean, you could initiate a hedge now if you wanted to. Especially now that NinjaTrader has the ability to do options. That makes it even nicer because then you can do it side by side. But that's, I mean, you always have to have a hard cut For a lot of people, it's 5%. I don't think I would ever want to see a 5% loss, but it depends on the account size too. I mean, if you're trading a $2,000 account, then 5% is all you have to work with sometimes. So you have to have hard breaks, right? You've got to have the e-breaks. If you hit that point, it's hard stops. Typically, like I said, it's at 5% or less. Big dependency on account size. But for me, if it starts breaking through that zone, then I know something's wrong. I've got to adjust. Ah, crap. Where'd my S&P chart go? There it is. NASDAQ 1390 the top. It's possible, but I mean, right now we're at a positive, we're reaching into a positive 1.5 DP. So the beautiful thing about a positive 1.5 DP is that it has an insanely high probability of holding the market down. But the caveat to that sentence is that by the end of the day, right? So by the end of the day, it has a very high likelihood of closing below that 1.5 DP. What it does in between there, though, is what causes what can cause the trouble. We still do not see accumulation phasing. They almost got it, but it was mostly just kind of you could think of it as like a double top in volume, I guess. They're not showing it yet. You'll know when they show up. It goes slow now. Everybody's waiting for the pullback. Yeah, nobody wants to buy way up here. They will because they feel like they're forced to, but every high is probably not going to go much higher unless it starts hitting that critical, tipping point. But I don't think that's going to happen until like 120. S&P previous bull bar low at 67 would be a zone of interest, but I would prefer to bottom weight more towards the 66s, 65s. S&P tested the entry point, but no fill. 67, looking for 68. I'm shorting at 89.50. That would be a logical point of interest. It would be front running that 100. So be careful, because if it does break the high, well, you saw what happened to me when it broke above the high for me. It can sometimes not be so fun. But testing the target, no fill. Starting to see that volume creeping up here. That was a big block of volume that showed up at 83.50. I definitely wasn't alone there, huh? Jeez. Yeah, but if I don't, it would be a good trade. Yeah, I totally feel you there. I know that one. I think we understand the vindictiveness of the market. Now, I know that if I'm going to put myself in harm's way, I'm going to do it with small contract size. That way I know I've got my bases covered. VVP zone of interest, now that we're fading off of the 1.5 DP, is going to be around 24.25, which is good for me. I would like to see it go through there a little bit further, though. S&P, I don't know. It moves so fast. I didn't see if it actually tested the target again or not. I didn't get a fill either way. All right, now we are seeing an increase in volume. There's a distinct difference now. We're beginning to see stages of accumulation. We've only had 2. Typically, there's 3. If it goes down now, cool. I'll take it underneath break even, wherever that happens to be, or at least try to. I would like to see it flush down to the big VVP that's just waiting to gobble it up back at 13K. It kind of skipped over it. S&P tested the target, didn't fill, and now dips lower. Testing the secondary entry point, but no fill. There we go. $67.50. See if they can climb back up there. Higher probability objective would be 67, but we've got such a bullish inclination that I have a hard time not wanting to look for just a standard point. Gold is trying to take back that bar that was bearish. That candle that was looking twin reversal E. They're starting to creep it back up there again. Very nice continuation. So with that continuation, buyers will be looking for that breakout pullback. Bitcoin's just kind of stuck around 58,600. Not much going on there. Ethereum also hovering. Euro's got some pretty good continuation to the upside along with gold. They're trying. Well, realistically, if they hit 65, that'll be my double. Accumulation phasing is now being proven. Taken in on the final one. 66.75. Just happened. There we go. 66.75 will be the objective. They snapped real quick to a double bottom on that bull bar too. Nasty. Bunch of meanies. Slow. We've got well, 10. I mean, at 10:30 we've got the crude oil inventories. Crude oil inventories. I mean, I'm anticipating them being bearish, but who knows? As far as crude's movement so far this morning, well, let's start with a 5-minute. We don't have to go crazy with like a 1-minute. It's already bearish. So, oh man, that higher low miss on the bottom. that makes me a bit nervous. Huge undertow. I don't know. First red candle on the MNQ 5-minute RTH. Yeah. They are building accumulation volume, so good proof up here. Nice small little pennant formation going on. More volume building in the 77 halves. S&P still waiting. I'm going to drop 3 there instead. Let's see if we can float this last one. Okay, well. You can't blame a guy for trying, right? Jeez. Vindictive SOB went right down to the tick and then bounced right back up. Fine. Nice press up towards the highs here. Like to see it pulse through the top, and that will allow another potential zone of interest. Big blow-off move. Buyers are trying to pierce above the 1.5. Would there be a way to play this with larger size? Sure. If you were looking for, I mean, logically, the way to play with larger size would be what I kind of jokingly would say rock the boat. Where if you were trying to keep it around, like, let's say, I don't know, 10 contracts or 20 contracts or whatever large is to you, I don't know. And as soon as you start getting up above that area, like if your top end is 10 and you're starting to get into the 11s, 12s, then you rock the boat where you sell a couple, you take the loss on those, but then you just accumulate more basically at the same price. You're managing your risk in terms of size, but that's really about it. I'm not expecting this move up to stay up here by the end of the day, no. But I don't know where they're going to put in the top, so I'm not going to hit the gas pedal yet. It's taken me how long just to get to 5? Still waiting. Downside VVP objective at the moment, kind of unfortunately for me, is around 48.50 now. So I'm going to have to see them drive through that. So the best thing for me to do at the moment in terms of my average would be trying to get my average a little bit closer to the 77.5 to accommodate for the risk at 48.5. I can do that a couple different ways. I can do that very easily just by exiting one. So if I wanted to suck my average up to the top, then you could rock the boat with one and my average would be a little bit further up. For now, I'm okay with it where it is, but if it makes a new high, then I'll quote unquote rock the boat. When was the last time you had to cut it? Crude oil. That was crude when it went. What did it drop from? It went from. It wasn't too long ago. I think. Well, I think it was on like the 320 contract. maybe it was a little longer ago than I thought. But it was a 320 or I don't remember. But it was when it just got obliterated. I hit the stops on a few of not all of them, but a few of them hit max tolerance, which is usually when I go to bed, I set a stop out in a position where I'm no longer willing to accept downside risk. It hit some of those, but not all of them. So it didn't technically take it all out, but it got close. It happens sometimes, and when that happens, it sucks, but it's part of the game. If you're going to be a scalper, you're going to run into those, right? As a scalper, your probability is incredibly high. You're generally trying to stay in like the 80s, preferably higher than that, because most of the time you're risking twice as much as you're willing to make in order to maintain that probability. So, you know, there are going to be those times where you just get your teeth kicked in. It happens. That's when you have the equity curve like this, where the scalpers have really consistent ups and then bam, and then really consistent ups, bam. Right? That's that kind of equity curve. The swing traders' equity curve usually starts out negative because their probabilities are worse, but then it goes and then hits a big win, and then slowly goes back down again. Actually, they'd be in positive territory now. So then it slowly goes back down again with small losses, big win. Small losses, big win, right? It's the other side of things. They both effectively achieve the same thing, just in a different way. The better alternative is swing trading and not scalping, especially for a newer trader. Scalping is incredibly difficult. Just to keep your probability high enough to break even when you're a newer trader, let alone actually do anything with it. Bear bar in the 5-minute. Sellers will potentially try to sell that, but I mean, realistically, look at this thing. That seems like a really dumb place to try to be a seller. But we have gone far enough where I have to give it to the sellers that they might be able to at least get a bit of follow through. The last time that the sellers triggered, their short was at 65 quarter, and they made it down a point scalp. So if they do trigger in at 66 quarter, I would rather be a buyer at 65 quarter. They've already made a 1-point move down. So I'm going to get greedy, and I'm going to look for a 2-point move and see if they can flush down to that area. Try to get a value pullback down to 64 quarter. Aggressive buyers will just buy into the face of the sellers trying to trigger it short, but I think they'll have enough steam to at least get a little bit down. Yeah. Now let's see if they can get a little more than a little bit. I'm looking for 64 quarter. Actually, buyers... Yeah, that'd be all right. 64 quarter. I want the buyers to get filled here, so I'll leave it there. Might not get a fill there, but... to the tick. Now, not getting a fill there is kind of a bummer for me because I'm not long right now, but is also important information because a lot of other traders who were short on this bearer bar will have not gotten filled there either. So a lot of shorts are still short. Now it's starting to pressure back on their break evens. Like, oh, no, go back down. You can kind of feel the pressure that they're under a little bit here. That's why I like it at 64 quarter because I want it to tick through it to fill them. That's where we'll likely get a much more violent response. NASDAQ to the downside. Just because these markets are going pretty poppy and crazy, I'm going to front run a couple out there just to play it safe because I'm not about to deal with some like crazy wick out of nowhere that I miss all of my orders. Well, that's 3. I'll leave it at that. That'll be all right. pressuring back against those sellers' break-evens. Come on, S&P, get back to 64 quarter. Got crude oil inventories in about a minute and a half. All right, that's break even. This is starting the long. That's too many up there. I'm okay with that. There we go. All right, buyers triggered in on the S&P finally. 64 quarter. First objective will be 65 quarter. After that, we've got 66.75. So they do have the 2-point move to the downside after tickling it and playing around with them and messing around with the break-evens and vindicting people out, I'm sure. They finally came back and filled it. Quick little pulse back up. Testing the first target on the S&P. There we go. Next target is 66.75. Target testing, no fill. Stop moves up to protect a point. The only thing that drives me freaking crazy about the S&P is this to the tick garbage. There's just so many contracts that trade hands. Crude oil plotting a massive wick after the inventories. So they are getting a bearish response to the inventories, at least initially. Let's look at a 1-minute chart, just so we can see what volume happened on the inventories. 60.71, market staying underneath it. Kind of looks like a major twin reversal. Yikes. Tested the target, didn't get a fill, pulled back, stopped out at break even on the remainder, or not break even, at the protected 1 point on the remainder. Still waiting for the NASDAQ. Going on 10:30 though, so we are moving into training time. Feel free to get those questions in. We'll get those covered for you. And just as a side note for the folks that are here, I've been running into some issues with TeamViewer. Do you guys have or know of any good alternatives to TeamViewer? I'm taking suggestions. I'm looking for alternatives as backups and things like that, just as a just in case. I've been using AnyDesk, which is so-so. Yeah, TeamViewer. Yeah, I know, right? Put the S&P back over there. We've got the accumulation volume being displayed, but so far, we haven't had the turning point yet, so there's been no reason to get too aggressive. Had a few extras, but that's about it. And if we start breaking the highs, then I'll look to probably rock the old boat a little bit, draw the average up a bit further. This naked area of volume here at the 1360s as well as the 48s, that VVP, in two of those zones make me a little bit nervous, which is why I might have to draw my average up just to make sure that I'm in the right place. But for now, it's okay. S&P, nice bull bar to the upside. Actually, might as well just keep the S&P on the screen while we're waiting for everything else. Waiting and waiting for market to do what you want really messes with your ability to be patient. Like the micro NASDAQ's not pulling back even L1 for us. Yeah, for sure. Eventually it will. And that's usually on these breakaway days how it works, where you've got this really strong, I mean like an incredibly, furiously strong move that's barely even pulling back. You know, there might be some shallow, barely even L1 pullbacks along the way, but it just keeps screaming higher. And eventually buyers just get sick of buying high. It stops hitting as many stops. There's not as many people to stop out. The stop run's dying out a little bit. The hype train is dying out a little bit. Less people are buying it, so it ends up pulling back a little bit deeper the next time. And then starts kind of winding out, and then you end up getting one of these. And that's the one that is what I'm looking to do on the NASDAQ. You get that deeper pullback. It allows all of the shorts who were stuck from back here to mitigate and get out with a small loss or around break even or even slightly above break even, and then reposition for longs to rotate the market all the way back up again. And then you get that massively strong reversal higher. And you see that type of patterning over and over and over and over and over again. If you go back on, I got to use a market that I'm not in at the moment. How about gold? So if you take gold for an example, will you go full screen, please? Jeez. You've got these really, really strong breakaway trends. I'm going to have to add a few more days of data here. 35 is not enough. Let's go 365. There we go. All right. So you get this really, really strong breakaway move. And this could be in the short term. It could be in the long term. This one happens to be in the short term, at least for the first example. You've got this big, giant rotation up. I mean, it just goes screaming higher. And after it goes screaming higher, nobody really had a chance to buy in. I mean, maybe here pull back to an L1, but that was about it. Until it finally ground its way back. And really, even then, that wasn't really much of a pullback. If we look at that from the bottom, and we look at the move, it did reverse off of a near L4. Not perfect, but when it rotated up, that was an L1. Okay. It pulled back a little bit. They got the L1 bounce to the highs, went back down, L1, 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 but that's all it was an L1. It never even went to the L2s. And then it continued right back up to a new high. Breaks a new high, L1 buyers come in. Breaks another new high, no pullback, no pullback, no pullback, no pullback. Eventually, you get that big dive. And that big dive is usually going to come back to break a previous major swing like we've got right here. This isn't, I mean, that's not my favorite major swing, but it is a major swing. Hang on one second. Got the NASDAQ going back up to the highs here. I'm going to draw my average up a little ways. Rock the old boat. But we've got a pullback that a lot of buyers are going to be waiting for. And one of the best things that I love doing is zooming out and looking at it and saying, okay, what are we dealing with here? Right? Where is the last major swing? What zone does that line up with? And does that zone line up with something along the way in terms of patterning? If I can get those things to line up like a TUL2, this one doesn't. This is just an L4 pullback. But it's the same concept. You get that trap below the lows. It wipes everybody out. And then it goes screaming all the way back up to the highs again. It happens over and over and over again. My favorite ones, the ones that I like paying attention to the most, and the one that I'm kind of looking for on the NASDAQ, is going to be the... like this, where you've got this really strong rally up, got an L1 pullback, rally, L1 pullback, rally, L1 pullback, rally. Finally dips down, we get the L2. And that L2 happens to be around that kind of in between the previous two major swings. That's when it's really perfect. Then you can get a nice little zone of interest out of there, but it doesn't always happen that way. In this case, if we look at this overall swing to the upside, let me take everything off real quick so we can see what's going on. From the lows, the first pullback all the way down at the bottom was an L3. Rotated up, we've got an L1. L1. Like an L half, I don't know, L half, L half, L half. We haven't even had an L1 pullback yet. So eventually we'll see buyers either defending the L1 pullback, which is where that VVP is, and that's why I said that was my concern, or we're going to see that deeper pullback that's going to flush down to the next major point of interest. The thing that stands out here and why I've been trying to get my average further up is because nothing else stands out here. The zone of interest is at the top, around 60s down to 40s. So it doesn't really help a whole lot. So. It will after we've finished. Yeah, exactly. So we're testing this major zone, right? Remember the big zone that I was talking around? The 115s, 120s in this area? This is the zone that I want to see sellers hold back from. And if they're unable to, I have no business being in the short anymore, and I'm just going to have to eat the loss. It looks like they're trying to pressure the zone, so I'm not going to be too fidgety and jump ship too quick. The NASDAQ loves doing this shizy kind of BS. They love it. When they try to get to this top, they mess around with it a little bit. People get short, then they blow off the high and stop everyone out. And then it comes dumping all the way down and ends up being a V top. Don't get suckered into the initial move. But if it shows some good continuation up here, that's going to make me a bit more nervous. So they can do what they need to in this zone. I'm looking for the larger reversal back down. Preferably now, if we can get this to rotate back down off of this high, this is starting to set up in a way that allows an L4 dip. Yeah, we've got that big VVP right at the top of L3 though. So a few zones of interest on the way down, and I'm going to really have to kind of see how the market responds to it while it's driving lower. But it's going to be this first zone in the L1, obviously. But then beyond that, it's another big VVP that stands out pretty obviously is more towards the bottom of the L1, which is at 13,048. The next big one is almost no volume at 13,000. It's just skipped right over it. Then after that, it's kind of the lows. So. Let's do final call for questions and we'll wrap it up. S&P from the bullish perspective and continuing back to the upside. we don't have any candle gapping or anything yet. If we look at the larger, I mean, there was some obvious candle gapping between there. So, I mean, sure, we might have had an objective. That was that top point that we were talking about there. That was achieved. But since then, there really, I don't know, there just hasn't really been a whole lot. Actually, it was there. I mean, I guess there's some candle gapping in there. It's just not enough to really care about. At least not yet. Some swing gapping. If we zoom out and we look at the overall move to the upside, we broke, well, I mean, they broke pretty aggressively above that swing. So we can use that previous swing low down here as a measuring point. Upside objectives, it's actually sitting right on top of that right now. Great. So downside objective is still to get back down into this L2. But I've got to pay attention to this L1. It could cause some problems just based on how volume formed around that area. Do you have a video with accumulation, distribution, in combination with order flow? Yeah, there's a few of them that I talk about it. If you go into the Academy, I go over it there as well. There are also some times where I'll go over it in YouTube land, usually in the webinars and stuff. But oh yeah. A second too late, huh? Got a nice lower high forming. I'm just trying to draw my average up a little bit further. I'm accepting the loss from the earlier position. So I've eaten, essentially I've eaten the loss from the first portion. The first trade is off, if you look at it in that sense. We've kind of exited everything and now re-entered a new position short for the swing back to the downside towards L3, L4. But they're starting to encroach on this 122. Like I said, they're probably going to challenge the highs. So if they try to break above the top, okay, that's fine. If you were not in a trade, where would you long? You know, honestly, I would love to look back with rose-colored glasses and say, you know, I would have gone long here and there and here and there and all of that. But honestly, there's not many pullbacks that I would have liked in terms of a value pullback to buy into with any type of size. It'd be mostly scalping. From a swing perspective or any larger size, like right now I'm trying to build in shorts, there wasn't really any, it never pulled back. There just wasn't an opportunity. The only opportunity was that singular dip down to L1, which I think was right there. And that was, I mean, you can see the response once they finally got that. But honestly, I don't know that I would have been long anywhere along the way. I would love to say, like I said, I was long all the way, but I just don't see any really decent points of interest to do that, except, you know, right at the open, which we were talking about, the breakout pullback, or not much else. What I would still be doing, if I was short or even if I was long, I would be waiting for that deeper pullback. I know that 100%. So regardless of the situation, the deeper pullback is what the majority of value traders are waiting for. Is the MNQ 60-minute building up a MACD divergence? Let's see here. I'll just put this one over on the MNQ. That'll be fine. Oh, I need the MACD. Pop you up there. Make that a 60-minute chart. It already is a 60-minute chart. Okay. Whoa. What happened to my MACD? Oh, logarithmic. Linear. Let's not do logarithmic. There we go. And I'm going to need a few more days of data, so let's go back. I think we'd be all right at 90. Is the MNQ building up a MACD divergence? Where it is right now, it would be building up a bullish divergence. This would be what I would consider an undertow, while the market's trying to drive lower with a 3-press bottom. But the entire way, the MACD, well, I mean, not the entire way, I guess, the most recent two. And if you go from the bottom, it's been going up since then, but this has diverged from the current market. So from a value perspective, a lot of traders will be waiting for the WACD, which is still going to be a little bit further down. And from the perspective of the sellers still maintaining, from the MACD perspective at least, they haven't broken yet. So as long as they still stay underneath this, then they're still kind of holding on. But you can definitely see buyers are trying to get the divergence too. There's a fight. We've got a wedge. Buyers are stepping up to the plate, but these candles that are getting bigger and bigger and bigger and bigger all the way up, that doesn't scream strength to me. That screams exhaustion. It's very hard for a market to keep that sustained and keep going. Nice little bear bar to try to pressure the market down again. Still haven't had that L2 pullback. The L2 pullback now would be back in the 13,040s. And the value pullback. Oh, okay. Ooh, okay. Now we're starting to line some things up here. Yeah. Now we've got some interest, right? So look at this. Now we've got a value pullback. It doesn't mean it's going to happen, but if it does, this becomes a big point of interest. We've got the value pullback at 0.71. We've got previous DP support now at 22.5. We've got the L2 base sitting at 19.5. Everything is starting to stack up there. And like we talked about, there's a huge VVP at the bottom of L2. There's a lot of things stacking up down here. Downside objectives at the moment is going to be around 13,030. I wanted to see them get below 13K, but it doesn't make any sense anymore. Got to adjust with what the market's telling us. Whether it's an answer that I like or not. Yeah, a lot of the move happened before the U.S. session, and that's something that's been happening a little bit more frequently. I mean, really, the bottom of this move was at 145 this morning, and it started rallying since then, the majority of the rally happening between 5 and 6. So, I mean, yeah, you snooze, you lose, I guess, right? There's nothing you can do about it, I guess. Oh, well. So I think it was asked before, but do you think it would sell off by the end of the day since we haven't had the 3-day weekend? That would be a logical thing to assume. Yeah, I mean, I think bulls are still coming in pretty aggressively, obviously. We've been seeing the volume starting to creep up, and we're in a major zone of interest. But, you know, aside from that, we haven't really seen a whole lot of anything happen up here. So if they do stay really, really lofty up here, again, I'm expecting that deeper pullback is going to get bought up like it's going out of style. But if it doesn't get that deeper pullback and we start going into the end of the day, a lot of times when you start getting closer to that like 3:30, you know the time frame, 3:30, 3:45 in the afternoon, where all of a sudden the market's just ripping, and it goes blam! And it shotguns everyone in the, just out, gone. That's the kind of thing that you are really going to be looking for in terms of a flash sale buyer, which can sometimes happen. If it stays lofty going into the end of the day and it stays up there at the close, I would expect that we're probably going to open with a gap up, an initial drive higher, and then a dump. It's a lot easier to sell when you've got that initial burst in volume right after the close, because of all of the at the start orders. They're all going to hit, so you can sell into them with size and it will go relatively unnoticed. And it's not going to be during the US session, so you don't have to worry about algos tracing you too much, you know. It's an easier location. At the moment, I'm looking for objectives on the way down. 1, 2, 3, 4. Sorry, just getting things ready. Okay, so that is all of them. So now this would be the long reposition. And that would be 3 so far? Yeah, 3. And then if it is going to dive down, we'll probably get that half deviation move, which would put a secondary point at 982. And there's 3. Okay. There. So effectively what I'm looking for at this point in time is for the market to roll off of the highs and attain that deeper pullback. Start pushing back into the L2 and allow buyers to reload at a better price. I'm going to be looking to exit my shorts on the way down and start reversing back long once we start getting buried into that L2 zone of support. So that'll be the next area. But if it does want to blow off the lows, a 1.5 deviation off of a value pullback is very common. And that would be down in the 79s to 83s. So now we'll wait. A little bit later this time, we actually had some action that kept going, but for now, going into the afternoon, it's pretty much just going to be babysitting this one and seeing and waiting and until it wants to do something or get away from here. But we know the game plan, so that's going to do it. As per the usual, today was recorded. You'll be able to watch that back on YouTube straight away as soon as we end this one. If I missed any questions, you can always shoot me an email, jhb@ssftg.com. Get those covered for you from there. Otherwise, tomorrow will be the last day because, again, it is a 3-day weekend. We've got Good Friday. On Friday, markets will be closed, so tomorrow could be a little bit of an interesting one. We'll see, but tomorrow will be the last day of the week, and then we'll wrap it up. Hopefully, I will still be long after it dips lower going into tomorrow. We'll see. But I'll keep the Discord chat for members updated, and then we'll go from there. Yeah, non-farms on top of everything else. What a horrible timing. Well, either way. Enjoy the rest of the day. I hope you had a great one, and we will see you all tomorrow morning. Talk to y'all later. Thanks. Bye.